So before we talk about benefits and payments, we're going to talk about welfare reform. And this is really important, particularly if you're an investor looking to work with projects within the southern area of the country where property prices are a lot higher, rents are a lot higher, and it can really implicate on households particularly in London, who have been affected by the benefit caps. So if you're not aware, there's a few elements of welfare reform which are important for you to know about if you're getting into this marketplace. The first one is the benefit cap, and this means there's been a cap now placed on the amount of benefits a person can claim. This, as I say, is having quite an impact in London, where it's simply not enough money to afford to live. So we've had, I know there's a huge problem now, growing problem with homelessness increasing in London and tenants who are being evicted from property. We have really, really massive increase in homelessness, and a huge proportion of these homelessness applications are being made because their tenancies are ending within the private rented sector. And a lot of these tenancies are ending because tenants just can't afford to pay their rent anymore. They've been hit maybe with these benefit caps, and they're having to pay a large top up to live in privately rented homes, and so they're becoming evicted, and it's having a real knock-on effect. So be wary of the benefit cap and make sure that you are certain that the solution that you're providing is an affordable solution. So remember, with social property investment, we want to set people up to succeed, not to fail. And so if you take a tenant, and I've seen this done before by landlords who perhaps were not entirely cut out for the social property investment marketplace, and they want to make more money out of these tenants, they want to charge them fees, or they want to put a top up on their rent, or and they creating solutions which are not going to be financially viable in the long term. And so they soon run into problems with these tenants when these tenants say, landlord, I remember a landlord saying he wanted a £25 a week top up from tenant, and I said, you can't ask them for that. You know, these people are earning like 70 quid a week on job seekers allowance. Like, you're going to bankrupt this kid, you know, like, you can't take that kind of top up. And so he was really keen on taking a top up. And I remember what we saw in the pilot scheme when we gave tenants big top-ups, and we knew that they couldn't afford them, it created a barrier, and it meant that tenants were avoiding us because they knew that they owed us a fiver from last week, a fiver from next week, a fiver from the week before. They'd got a rent arrears of this and a rent arrears of that, and so this was really tricky to manage. And top-ups really unsuccessful because, as I say, you end up creating a bit of a divide between you and your tenant. And people who are claiming welfare benefits, you know, there's a big misconception about how much money they actually have. And you can see some of the benefit rates on my screen here. And it's really actually very, very difficult to manage on those sums of money. And life on benefits is not easy. And if you're a single person, particularly under 35, now housing benefit for a single person under 35 is only going to be eligible for the single room rate, which means if you're under 35 and single, you can only get enough housing benefit to afford, if you're lucky, a single room. And that, you know, you could be, I've seen it many times where they're families that have broken up and dads that have moved out of family homes, and they're 33 and having to come and live in in a little bedroom somewhere, and the kids can't come and visit them, and it's really, really tough. And there's a huge misconception about just how much benefit rates are, how much people get, how long they can stay on them. Life on benefits is pretty tough, and you should be aware of the fact that when you're setting up social property investment projects, if you set up a project which financially you think is going to be a stretch for your tenant, it is going to be a stretch for your tenant, and it's probably going to create a divide between you and your tenant if your tenant starts running into arrears of anything. So say if you have, when you're setting up your bills, if you're refurbishing a property, which we would like you to do with social property investment, we would like you to utilize the property to the best of your to the best of its abilities and get the most rental income out of it and maximize its profit as wholly as you can, but also get the most out of it for the residents and make sure that it's the space is utilized really well for them too, and they're getting they're getting a quality home for the rent that's being paid, and make sure they respect that too. Talk more about working with tenants and getting good relationships further on in the program, but for now we're looking at maximizing the profit, so and the cost effectiveness with the finances. So welfare benefits, as I say, make sure that you, when you're looking at your location and area and your LHA rates, you're looking at that in conjunction with a tenant's circumstances and making sure you may find a great investment and it's, the rental returns are amazing and it gives you a great yield, but then that's not going to work out if your tenant can't afford to live there and doesn't pay you the money which you're anticipating. So I see it often where landlords say, we're making this much money out of this property, and then when you strip it down and you say, well, actually, how many voids did you have last year? Actually, did you collect all of your top-ups? Well, did your tenant pay all of the bills? And when you start stripping it down, and that's why it's important to be quite fanatical about every little aspect of the project that you're creating, so that you can hopefully avoid these types of issues. So I want to talk about another element of welfare reform, and that is universal credit. Now, universal credit is the new local housing allowance. So if you're getting into this strategy, you should probably know already that local housing allowance is the welfare benefit paid to people who are of a low income and rent privately rented homes. So universal credit is a new version of benefit, and basically what they're doing with universal credit is they're trying to encourage people to become more financially responsible, more independent, to take charge of their own finances, and they are paying people now with universal credit, which has been rolled out over the last few years, and they're now paying people instead of how they used to with housing benefit. So housing benefit and local housing allowance, it could go straight to a landlord, or it could go to the tenant and they could pay themselves. With universal credit, because tenants or benefit claimants in general were receiving lots of money in a kind of drib-drab fashion, so they might get the job seeker allowance every 2 weeks, they might get the housing benefit every 4 weeks, they might get some tax credit once a week. So they're getting all these dribs and drabs of money, and it was identified that it was very difficult for tenants to manage their money when they were having such a disorganized fashion of their payments coming in. And so universal credit was came forward because we did need a reform of the benefits system. It did need an update, and universal credit was thought that they could kind of band all these payments together. So we'll pay job seekers allowance and housing benefit and all these different benefits. We'll bracket them together and we'll pay it like a salary to this to the claimant. And we'll pay this salary payment once a month, and hopefully this will encourage people to manage their money better and to operate as if they are almost working and receiving a salary. And also there would be some very encouraging work that would go on that would try and support people into work, and universal credit aimed to be a benefit which was work friendly. And I know there's been a lot of teething problems with universal credit, and I'm not a huge fan, I must admit, but I think we have to stick with it, and it's here to stay, and we'll see where we move forward with it over the next few years. The biggest difference for universal credit for you as an investor or somebody that's working with tenants in receipt of benefits is your tenant will be no longer automatically eligible to have their payments paid directly to you as a landlord. And so this can be pretty tricky. If you, say, have a tenant which is living in a property and is changed over to universal credit, if you've been receiving a direct payment for that tenant maybe for some time, you may not be any longer entitled to that payment of rent going directly. The tenant may need to be taking responsibility for the payments themselves, and the government are placing that obligation on them now. So I know if you look up at the universal credit pilot schemes that went on, and I know from personal experience that when universal credit drops in the bank, generally people tend to spend it. It's quite an exciting moment when large sums of money land in your bank when you're not used to perhaps gaining large sums of money from being out of work, or for some tenants I know that received big payments of universal credit during the pilot scheme, they'd certainly never seen sums of money like the payments that came through of hundreds and hundreds of pounds each month, and they were totally ill-equipped and unable to deal with those types of payments and that level of funds. And they really, I had some tenants, alcoholics, that went back on to drink when they were accidentally sent payments of rent via check, and when changing over from universal credit. Pay tenants that ran into rent arrears because they spent universal credit. So it's not an ideal situation. They do direct payments of universal credit, and it's important to note that we're still phasing in universal credit at the moment. So you may not even encounter it for some time yet. It may take you a while, and you may be on the generalised local housing allowance benefit. Your tenants may claim that, which again, you can get a direct payment, but in my experience, it's best not to do, because direct payments are paid on a vulnerability clause. So a tenant's only entitled to get paid their direct payment to you as a landlord if they are deemed as vulnerable in some way. So if the council decides, actually, we think that this tenant has had an improvement in their circumstances, we've been out to see them and assess them, and we've decided that they don't have those same vulnerability criteria, they can remove that clause of having a direct payment coming to you. And so this obviously can be a tricky situation to navigate through. When you're setting up a social property investment project for the first time, my recommendation would be to work with a credit union. Now, there are numerous benefits of working with credit unions, and they're really service user focused, so they're there to look after the best interests of the service user and the tenant and the client of yours, but they're also going to ring fence payments of rent for you too, and safeguard any payments coming through. So having a credit union is a way of getting a council to they're happy that they're paying the tenant directly, so the money's being transferred into the tenant's account. However, the credit union are going to ring fence that money off and not let the tenant spend it, because they're there as a community banking service, and they're there to help the tenant manage their money well. So there may be a small charge for you to use a credit union service, a couple of pounds each month to have that payment transferred over. But it's almost like an insurance policy for you as a landlord to spend maybe £60 a year on knowing that your payments are safeguarded and ring-fenced, and your tenant's not going to be tempted to spend them, and they're always going to be paying their rent and not running into rent arrears via being careless or being forgetful or any other reason like that, having a direct debit go out and eat into their payment if they've got a payment of rent coming. So there can be lots of ways how tenants can run into financial difficulties. And this is using a credit union is a really, really safe way and a really positive, proactive way of helping your tenant to budget their money better and to take financial responsibility for themselves. And also they can look at, the credit union will give them advice and maybe support them in a way that you're not qualified to do. So that's a really, really good tip, is to always work, if you can, to really try to work with credit unions. Now, I work with a credit union which I discovered working with on the pilot scheme, and this was a really great discovery for me. And once I found out about Tasker Payment Services, I decided to have a try of them with the pilot scheme, and we had great success with them. Now, Tasker Payment Services is a company owned by a lady named Leanne Tasker, and she was similar to me. She used to work in a credit union, and she saw what was going on with universal credit, and she thought, we're going to be in for a big problem when people all of a sudden have to pay their rent themselves, and maybe I could take my skill set from my work within the credit union and I could open up a credit union service for landlords, which would help tenants and landlords to manage this change in system and way of operating when universal credit comes through. So Leanne opened Tasker Payment Services, and she opened as the UK's first purely online credit union service which focused on housing benefit payments. And I'm not affiliated with Leanne in any way, so I'm not promoting her for any gain of myself. Please go away and have a look at her website and see and do your own due diligence and chat to people within the network, because I know she's very well known, and lots of landlords within this marketplace and big letting agents too, I know use Leanne's services and Tasker Payment Services. We've always had amazing success with payments collected with Leanne, and basically, as I explained before, the council will pay the tenant's LHA into their credit union account, and then they will take that payment and pass it on to Leanne at Tasker Payment Services. They will take the payment and pass it on to the landlord, and the tenant won't be able to intercept that or spend that in any way, or be able to become in any financial difficulties. If there's ever a payment not come through, then Leanne will be alerted to that, and if there's difficulties, you have again another organisation in your consortium to help deal with issues as they arise. So I really loved my work that I did with Tasker Payment Services, and it's a best practice technique that I really recommend using. Make sure that one downfall of using the Tasker Payment Services as opposed to using a local credit union is they're not going to give the same kind of advice and support to your tenant, in terms of they won't be able to go down to the office and speak to somebody over the counter and get a bit of support. So they may want to open two credit union accounts, one with Tasker for rent payments and one with a local credit union, which can help them to manage their money on a regular basis and their benefit payment, and they have savings accounts and they do small loans and things like that. So it could be good for your tenant to have a combination of two, and that may serve the purpose very well and get them all of the support that they need. So stay with us for the next part.